Morning, everyone. So I just wanted I'm sitting in my office uh, with the laptop camera. We'll see how this goes. But wanted to circle back to the letter that I posted about the farmhouse that Trisha and I bought back in 2012. Um, it was our first foray into seller financing, um, inventive financing. And so just wanted to kind of go over what that looked like and how we ended up with the house of what we consider our long-term home. We, as the letter showed, it's a house that we had passed by. It was down the street from us, a small ranch that we owned and lived in at the time. And it's a home that we had driven by many times over the years. Had always been curious about it. It sits back off the road about 500 feet, and you can kind of just see the main farmhouse from the street. My boys and I have had walked in through the backwoods from our house to the back of the property numerous times, exploring, and something that we were always curious about. Um, was at a 50th birthday party for a friend of ours and just happened to be talking to a guest that was at the party who said, his relatives actually own the property, or his wife's relatives. And we got chatting, and turned out that the owner was an elderly gentleman who had moved into a nursing home. His son was governing or managing the property, and we decided to reach out and see what his plans were. At the time, they had a family friend who was renting the place. The house was built in the late 1800s. It definitely needed work. And so we sent the letter with grand hopes that, maybe we could put something together. Uh, in the end, it took 6 months for the son to reach back out to us. It was right before um, presidential election. And at the time, Obama was about to take office. They must have reached out to us in November. And the seller was worried about capital gains being messed with. And so they had the house had been in the family for probably 70 years. They bought it in the 40s. And so the son was worried that he was going to have a really large capital gains bill if new administration came in, and so he was very motivated to sell it that year. And so we got talking, and Trisha and I owned actually Trisha owned a house, I owned a house, and we didn't have the financial ability to go through conventional lending at the time, just because we had too much debt load. And also, my business was just starting to take off in the real estate world. Commission checks were rolling in, but not as heavy as I needed them to qualify. And so we got talking to the owner. We came and looked at the house, fell in love with it right as we drove up the driveway the first time. And it's 56 acres. It has a barn. It has the house. It has what is now my office. Nice building that was built in the 80s that is very rustic. It was the previous owner's wood shop. And so I got talking to the seller, and you could tell that he definitely had some motivation. They owned that property outright. It had been in the family for many, many years. And so Trisha and I went home that day and started talking, how can we put this together? In the end, the seller wanted it to close before the end of the year. That was his main goal. We came up with a price that made sense to Trisha and I, knowing what our affordability was at the time and what the house needed work. Um, a portion of the property had also been sold into conservation, which was another big part of this. Uh, so the house, lots of acreage. The family had started working with conservation to buy up the right to develop the land. They wanted to keep it pristine. It's an agricultural easement, so I can still farm it. Previous owners were farmers. They raised cattle on the property. And so I was able to afford it that much more because conservation came in, paid the seller a large amount to keep the property from being developed. So that ate up about half the value of the property. Um, we got talking to the seller, and we made the offer of 300,000 for the house. We thought it was worth more, but that's all at the time that we thought we could afford based on our budget and where we thought my business was going. Trisha was still working with the state in social services, and then we tried to figure out, well, how are we going to pay for it? After sitting down with the seller, he was somewhat savvy. We came to an agreement that he wanted $200,000 in cash, and that he'd be willing to hold a note for the other 100. So then Trish and I had to figure out how to come up with 200,000 in cash. We definitely did not have it. We had just gotten married, and we paid for our wedding. We did have a little bit on the side. Trish is the saver. She had a lot more than I did at the time. And so in the end, we found a family member that was willing to loan us 200,000 in cash at a reasonable interest rate, with the understanding and the projection that we would be able to refinance the house fully the following year. The plan was I was going to sell my house, which would get that off my debt load, put a little bit in our pocket, and that would allow us to refinance with a conventional loan and put that in place. So the seller kindly, and I think we helped him, he helped us, took a note for 100,000 at no interest. We're not sure of the legality of that, but that was years ago. I think looking back or learning forward, probably was not legal for him to take a zero interest loan or offer that to us, but we did that. The 200,000 cash we handed over to him, and with the understanding, handshake with family member, but they respected us and believed that we would pay it back as quickly as we could, and we did with interest. And so we were able to get into the creative finance world on our first go together. It worked out beautifully. So we closed, I think, in December of 2012. And by 2013, June, I had sold the other home. My business continued to do really well throughout that first part of the year. And we were able to refinance with a 20-year note, conventional lending through a local bank. And so we were able to pay off the 200,000 back to the family member. We were able to pay off the $100,000 loan back to the previous owner, and took the home on ourselves. When we did the refinance in June of the following year, we had the appraisal done because the banks require appraisals, and it appraised out at 450. That was our first, like, whoa, look at what we just did. Again, the seller, I think they really liked us. They wanted us to have the house. I think they probably knew there might be a little bit more money in it than they had sold it to us for. But we were very appreciative of that. And we have been here ever since. We've made improvements, but the interior of the house is still older. We always have ambitions of replacing, fixing, remodeling. But in the end, we've spent most of our additional money on buying other properties through creative financing and regular financing. And, the hope for this channel and this community is that we will on occasion share how we got into the next property and the next property, how we've helped some other investors get into their properties, maybe not the traditional way, and also some tricks and of the trade as to how others who may not have the financial ability to go through conventional lending to start, or may find a great opportunity that doesn't need conventional lending, how you might put a deal together, creative financing, outside the box financing that could make sense. So looking forward to sharing more. If you have questions about the deal for our home, be happy to, answer any questions. I have Trisha chime in the comments as well, and just wanted to put that out there. If you find a house that you really love, never hurts to write a letter. The only thing they can say is no, and you've wasted a little bit of time. But if they say yes, some magical and wonderful things can happen. So, hope everyone enjoyed this video, and let us know what questions you have. Take care.